Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update the picture on the euro currency. Although last week we haven't got any significant action, since some more details we've got on the current situation based on the fundamental analysis that we usually provide in our weekly report, based on the technical picture, especially on intraday charts, because as you can see on the high time frames, well, we have very minor differences, mostly spiral impact on the picture in general. I mean, on the monthly, on the weekly chart, even on the daily. So not many things to discuss here. Meantime, the overall situation stands so that investors are a bit confusing, and keep in mind some, as they suggest, some maybe race between the different central banks, hold the first in rate change. And that bring confusion to the price action. So they're trying to catch this first spike in the rates, where some few participants exist currently. Among the first who could change the rates stand United Kingdom, Australia, and maybe Canada. So this makes investors to be very sensitive to speeches of the representatives of the government members who suggest and give any hints on the possible rate change, and lead to the rebalancing of the portfolios, at least among the speculators who are trying to catch this first spike in assets to get the bargain result. So that's the thing that we discussed in weekly report today, and as we suggest, shed some light on this subject, which means that in a shorter term, within the 3-5 weeks, we indeed could get some bullish performance on the euro currency, maybe even a bit more extended that we see currently, and as we suggested initially, especially if the central bank will tell something different on Thursday, the next week. So it'll be European Central Bank meeting, and as United Kingdom stands actually at the edge of the rate change in November, that could push the European Central Bank to a bit more aggressive rhetoric. That will be definitely supportive to the euro currency and could trigger a bit more significant action. This is what we expect, not only on the euro currency, but on the United Kingdom currency as well, and in commodities currencies in particular. But we do not expect that this will be really in the longer term. So later, when the Fed will step in this race of the rate change, we think that status quo should be reestablished and assets will flow back to the United States dollar. But it doesn't mean that within the few weeks we can't get the good bullish stops for trading on the euro currency, for example. So on the daily chart, overall price action stands so that euro keep chance on the further upward action. So indeed we have flag consolidation that is forming right below the major resistance in 1670. This type of the behavior suggests that market is consolidating before breakouts. The same story we see on the dollar index. So we already mentioned it, and double repo here stands in progress. And market indeed also is forming the same consolidations on the euro currency right above the 30% level. So this consolidation suggests that indeed market also could follow to the target of the double repo, which is the 50%, at least the 50% support of this thrust. For the euro currency, it means the action somewhere to the 1730, maybe even to 1760. If central bank indeed will be more hawkish than it was suggested initially, this could trigger more significant extension on euro currency. We currently do not know that, and just base our analysis mostly on the factors that we do know currently. But we should keep in mind this, because I think that current price behavior here and the standing tight below the level reflects some hopes among the investors that central bank will tell something more than on previously. and the statement will be not as dynamic as it was before. So that's why for us the culmination session will be on Thursday, because there will be either expectations of the investors, hopes of the investors will be fulfilled, or it will fail. And that could trigger really dramatic action in euro currency. So while investors are still hoping to get something, the price action also has some bullish signs. So if you'll take a look at the 4-hour time frame chart, we have first market standing above the neckline of the hand shoulders pattern. It keeps chances on further action to the XOP. So this ABCD pattern is still valid. Second, market stands and shows the tight consolidation triangle, takes the triangle shape right below the major resistance area. It's mostly typical for bullish sentiment, because in the bearish sentiment, reversal usually happens faster and sharper. So market very rare stands some consolidation and then starts dropping. So this is not typical for the bearish type of action. And finally, here we recognize some signs of the bullish dynamic pressure, because trend stands bearish while price action is not. This market is forming higher lows. This is signs of the dynamic pressure, which suggests that at least some upward spike here should follow, and market should try at least taking out of the previous top. Hopefully it will be more reasonable upward actions, or at least maybe to the XOP, which is the 1730. This is the conclusion that we could make on the 4-hour time frame chart. But currently the most tricky moment here exists with the positioning. So how you could possess yourself for a trading. Currently it will be a really tough challenge to do this, because if we wouldn't have the European Central Bank on the horizon, I would say, well, please stop somewhere below this area, trying to buy inside of the consolidation and watch what will happen. But currently with the European Central Bank statement, we will get probably a lot of volatility. So it will be spikes, it will be washing rinses and so on. So, and actually we do not know what central bank will tell. That's why the bad surprises might be as with the attempt to buy inside of the consolidation with placing stop somewhere below this area, as with the attempt to use the stop buy order somewhere in the moment of the breakout of this level. Because if, for example, European Central Bank tells nothing and market on anticipation of the hawkish decision will start climbing higher, this could be wash and rinse and then big collapse down. So in current circumstances, you could use these common ways to take the position, hoping that everything will be okay, maybe to place a bit deeper stop order here, somewhere in the middle of the range of the previous consolidation. That could help. But alternative solution in the current circumstances, I see in using the options. So if your broker provides you chance to buy the option, you could consider taking the short-term call options, for example, out of the money. That will be relatively cheap, and you do not need to worry about the stop order. Besides, if even market will go absolutely in a different way, your option will be, you could close it with some return of your spending money, because it has not direct relation to the price action, and it has price of the option. It has the curve chart, so it's do not have the direct relation to the price, and if market will drop, your option still will cost some money, and you could get back some of the premium that you will pay. So in current circumstances, I think that using options, it's might be best solution for a current situation. But of course, you could use the classical approach, and hopefully everything will be okay, and this will be not as big volatility as it we suggest right now. So that's what we have on euro currency currently. The coming of 3-5 weeks probably should be very interesting, on not only on euro but on other currencies as well.